folks. Everyone is freaking out as though the entire market is crashing, but no, it's just you speculators and you Wall Street bettors out there that are experiencing your first real correction in highly speculative investments, which is why I always tell you guys to take profits when things are very juicy and frothy, because things like this happen on the regular. But if we zoom out, folks, just taking a look at the S&P 500, ain't no crash going on here, only down 2%. NASDAQ 107.9% down, and the Dow Jones is only down 1.83%. But nonetheless, folks, I'm keeping my eyeballs on some companies. We're going to go through a lot today, including 3 stocks you should be buying on these dips. Stocks that I am terribly crossing my fingers I want them to crash. We're also going to talk about the stocks that I own that have crashed, and just generally anything else in between. So if you appreciate this, hit that like button, folks. Let's get right into this by just going through some of the companies that are falling off a cliff. Enphase, which I found relatively interesting because many of you know I own a company called Northland Power. It flies under the radar. It's my favorite monthly paying dividend stock, which actually we should look up because Enphase is trading down about 24.8%. And I know a lot of people picking that dip up right now. And taking a look at Northland Power, is it trading down as much? That's a good question. I think this one wouldn't be just because of, only 15.4% from its all-time high. Renewable sector is one I'd keep an eye on, guys, because we know where this is going with the new president-elect. Taking a look at the ARK Innovation ETFs. Now, these ones, oh my God, guys, fell off a bloody cliff. ARK is down 22%. Now, if you do not have a lot of exposure to spec, which something tells me you do because everybody's been chasing spec plays for the last year, currently down 22%. Great buying opportunity. Same with the one that I hold in the ARK Genomics space. And it's really funny because the best performer of the bunch being the ARK Genomics space, obviously going to be the worst performer of the bunch. I'm not in a rush to be buying anymore right here, but I'll get into what I'm buying in a second. Let's continue on with Tesla being at the tippity top of the weightings in the ARK Innovation ETF, which is trading down 26%. Watching the likes of Meet Kevin this morning really buy aggressively on the dip. It's really ironic because this is where I sold the last bit of my Tesla shares, right around this 630 mark. I do not want direct exposure to Tesla anymore to any varying degree. If it dropped off a cliff enough, I would be all on board. I don't know where Tesla is going. I've told you guys, you're making bets here, and the only bet that Tesla is relying on is full self-driving autonomy, baby, and we ain't there yet. And until we are, I don't want to hold it at these absurd valuations. Anybody that holds Tesla that has 2 cents in their brains realizes the valuation is nuts and it completely hinges on a future that does not yet exist. But when it does, I'll be right back in. But for now, I'm happy holding it through the Qs. One of my stocks getting relatively hammered. Actually, not as bad as I would have expected, but obviously MindMed falling off a cliff right now, down 27%. Taking my profits out of this, I'm fairly happy with the position for the rest of the year. I don't really plan on touching it farther. Taking a look at my other big spec playlist. This is annoying, frustrating, but super awesome at the same time because today, probably after I've already posted this video, I'm doing a mastermind where a bunch of creators and influencers, CEOs, and people that work in the space industry are all coming together, including the VP of Business Development for SpaceX. And I'm going to be posting some clips of that probably on our live stream channel at the Passive Income Educator. But it's going to be really neat to rub shoulders and talk about the space industry literally in a couple hours while I'm making this video. I got to get ready for that. But Stable Roadhouse Acquisition, my momentous play, probably the worst performer I've touched in a while, down 47%. Oof, that one hit close to home. Thank God it was all profits from MindMed. And I did cost average down a wee bit, but I'm not in a rush. If you're new to this, you want to buy some, great buying opportunity here. And my personal opinion on the space industry, why I wouldn't be selling and I'd be more inclined to buy is, guys, this is a hype industry. In the next couple of years, this is going to become a big deal in my opinion. And right now, there's only a handful of companies. And if that money starts funneling into this industry, it can only funnel down into these handful of companies. So they're going to be volatile for sure. But I think anybody selling to this degree is a little nutty right here. So again, I would be patient, however, if you own some already, because if this thing merges in the next day or two, then we are exposed to the full public market and this thing could drop even farther. But because it's a special purpose acquisition company, right now, the farthest it could possibly drop is $10. I didn't think we'd see sub 15 again, but here we are. And I'm just going to be patient because I do have enough capital in this business already, but I'm still highly bullish, even in a period where it is down 47%. I put my money where my mouth is. Stick around because tomorrow I will actually show you how much I'm down on that one. Comparing it to Virgin Galactic, the pinnacle of the industry right now, the thing driving the entire sector, at least was driving the front of the sector. Still worth $7.3 billion though for Virgin Galactic, but this one also getting hit hard, the entire space industry just falling off a cliff, but still fairly bullish, because for Virgin to be worth $7.3 billion, I mean, that's still a lot of money, guys. The golden childs of the pandemic, Shopify, actually not down as much as I would have expected, and same alongside Zoom, which is one we all know Cathie Wood has been buying into as of recent. She thinks this 37% correction in a company like Zoom is ridiculous. I honestly think this is debatable. Zoom, Shopify don't tickle my fancy as much as growth companies. I'm sure they're in the QQQ ETF. I'd still rather own it that way than having to buy all these individual companies. Like, I'd rather own PayPal, and I do, through the QQQ ETF, folks. But putting the Q ETF aside, I feel like I'm just selling that over any of these companies. But let's talk about the individual stocks that I am looking to buy that I'm really hoping get hit in this crash, which they don't seem to be, because this is just a spec crash. I know I've had this bipolar, should I buy it? Should I not buy it? Do I like it? Do I hate it? But of course, we're talking about Coinbase here, folks. I am not stepped on the pedal just yet to be buying Bitcoin. I do have capital ready to buy Bitcoin, but I haven't done it yet. I'm still patient. I will be getting to that decision shortly. I'm just debating on whether I want to buy Bitcoin first or if I want to buy Coinbase first. I don't recommend anybody buy these. I just find them interesting for myself. And I've had some frustrations because I tried to sign up to Coinbase. Being a Canadian, if you are a foreigner at all, using Coinbase is a complete joke. But at the end of the day, if you live in the US, Coinbase is a pretty advantageous platform, and I'm not promoting it. I'm not an affiliate by any means. And just taking a look here, guys, the reason that this is such an interesting IPO, most people just aren't paying attention to the numbers. First of all, Coinbase apparently has done $322 million in profit. In 2020 in the midst of a pandemic. Unbelievable. They have 1.28 billion in total revenue, about $1 billion in transaction fee revenue, and more impressively, 11.1% is what Coinbase owns in the public crypto trading market, which is pretty incredible here, folks. There's a lot of really interesting bullish statistics. Unfortunately, the company is going to IPO at $100 billion, which in my opinion is largely overvalued. But if you are making a bet on the crypto space, you think this is something that's going to continue moving forward, this is pretty interesting to me, because this is like buying, Intercontinental Exchange. ICE is the ticker symbol. That company runs the New York Stock Exchange, many of the platforms we trade our stocks on. This is the idea. If you're not bullish on Bitcoin's price, you just have to assume that people are going to keep trading it. It doesn't matter what the price is. Coinbase is going to make money off the transactions. And this, in my opinion, is like owning the Intercontinental Exchange of the crypto space. I find it very attractive myself. And guys, I might just straight up buy the IPO, and I'm hoping in this speculative world crash that we're experiencing that this thing IPOs like tomorrow and it falls off a cliff because people just don't want the exposure. That would be the dream world for me. Probably not going to happen, but I'm keeping my eyeballs on it. Consider subscribing, because I'll update you as soon as that becomes publicly available. Now, Facebook, guys, oh my God, this is one that has been driving me up the wall. I have been ranting and raving about Facebook because in the S&P top 10, I honestly think this is the cheapest, most underrated company, and it is growing at an absurd rate that should be experiencing a growth. The stock should be growing at the equivalent of Tesla, Zoom, or Shopify, but somehow it trades at a very, very reasonable valuation. In fact, in such a reasonable valuation, it's cheaper than Pepsi stock and Johnson & Johnson on a forward basis, and that doesn't make any sense to me. And I own a lot of it already. I got about 13 or 14,000 riding on this. And to me, I want it to dip, because if it dips like it has experienced in the past, because Facebook is not uncommonly known to drop anywhere from 20 to 40%, which is crazy to me. Hasn't happened yet, but if it does, believe it or not, I will take credit. I will take whatever it takes to buy more of it on that dip. But right now, I'm just being patient. I'm watching it. And I'm annoyed because every day I get up and I look at my spec stocks that are crashing. I'm like, why the hell is tech holding up so well? Nonetheless, putting that aside, what about dividend stocks, guys? I am not buying these right now, but I can recognize that they are on full discounts. I am more or less looking in the new sectors. Many of you know I've talked about Canadian stocks like Hydro One, TELUS Communication. I still want to buy those, but more importantly, if you're new to the market, I wanted to offer some really awesome dividend stocks, because dividend stocks have been outperforming right now. Actually, they're the only stocks you want to hold, because the recovery stocks, anything to do with dividends, has been really stable. I mean, that probably is represented in the S&P 500 as well. But I'm going to recommend Kimberly-Clark here, guys. I own some of this already. If I get some dividends, in my account where I hold this. I will be picking up more. I think it's one of the better dividend stocks. It's on a relatively decent discount. It's a toilet paper play, so it doesn't make sense for it to be down 18%. Revenues, yeah, a little choppy. But this, the discount and the brands you're able to pick up, this company's going to turn around, guys. This is a long-term buy and hold forever kind of a company. Really love it. Really recommend it. And if I was smarter, the next company that I should have done is taken all of my spec money and just put it into Lockheed Martin. Lockheed has been treating me relatively well because I bought it on the lower dips right around the 339 market, which is trading up slightly, but this is one that I don't recommend you overlook. It could run into a little political issues because it is a government defense company, but I love it to get exposure to the space industry. This is the company responsible for getting Perseverance on Mars. Really beautiful, innovative stuff. And yeah, I just really believe in the space industry, guys. And the fact that you can cap in a 3% dividend yield, get a diversified portfolio with government contracts that have been expanding drastically and one of the greatest growing dividends in the dividend market, I would highly recommend checking out Lockheed Martin here, folks. But finally, just taking a look at the broader markets, it's frustrating. It's very, very frustrating. This is not the crash that I want here, folks. I mean, take a look at this. All your Qs are in the green right now. They've been trending sideways. Your Apples of the world, they haven't really been dropping. Every dividend stock is pretty much fully recovered. I mean, when we're taking a look at RioCan back over 19, the Canadian banks hit pretty much all-time highs. British American Tobacco, MO, trending sideways, but they're high dividend yielders, so you can't complain about that. And then you get to the bottom of my list where I keep telling you guys, got to be real careful with how you put risk in the market, because when things get bad, this is what happens. I don't know how many times I have to remind you guys, but really pay attention to your risk part of your portfolio. Right now, if I take a look, I'm actually, I think, flat on the year. I think I'm up on the year, actually, because taking a look where I started the year doesn't really matter. Either way, my portfolio is doing phenomenal for the market conditions we're experiencing, and that is because I mitigated my risk. And I always tell you guys, man, take profits, take profits, take profits. When things get out of control, always take profits. This is mild here, folks. I'm hoping this correction gets a lot worse, but right now this is a very, very mild correction, and it's just slapping people, reminding them that, hey, if you're going to speculate, just remind yourself that speculative stocks can drop 40 or 50% at the drop of a dime here, folks. So in light of all this, I pass the question off to you. Let me know what you guys think in that comment section below. But yeah, crazy market, guys. Stay cool, stay awesome, and I look forward to catching you tomorrow.